Well, hello and welcome to another video by Financial Learning. On today's video, I'd like to talk to you about the bullish case behind Bitcoin mining in the loom of these increased tariffs. If you looked at the overall market, you would have seen that we have been in a significant downturn ever since Trump put out those reciprocal tariffs. But if you did look at the price of Bitcoin, you would have seen that it did bounce off of that $81,000 price and is trading somewhere around $83,000 or so. I have a couple of key factors in which I believe we are starting to see Bitcoin break away from the overall trending markets, and a couple of bullish reasons why Bitcoin mining may be the bullish thing for 2025 with these tariffs in place. So without further ado, let's get right into it. All right, and jumping in on this slide here, this is going to be the outline for this specific video. We're going to jump into each of these bulleted items, but just to give you a quick debrief, we're going to be talking about the bullish case for Bitcoin mining amid the increasing tariffs here in the US. So the first item we're going to go into detail on is going to be the increased demand for decentralized assets. Next is going to be strengthening Bitcoin's network security. Third is going to be increased institutional investment in mining. We did see some of this actually this past week. We're going to go into that detail as well, but continuing on. Number 4, potential for policy adaptation. So we're going to go over some of the latest federal Bitcoin legislation, some of the policies that are currently underway or have already been announced. And then 5th, we're going to talk about the higher price of Bitcoin and how that can offset some of the increased costs we're seeing with these tariffs. All right, I'm not going to read off this, but I am going to go into a little bit of detail on each of these sub-bullets here, starting with the rising tariffs, especially in major economies, often leads to inflammatory pressures, currency instability, and trade disruptions. This uncertainty can drive investors toward Bitcoin as a store of value, increasing the Bitcoin price. A higher Bitcoin price directly benefits miners by making block rewards and transaction fees more valuable. So these are all excellent bullish case studies for why the Bitcoin mining community can benefit from these tariff increases. So again, being a decentralized asset. All right, now let's go into a little bit more detail on how increased tariffs could possibly strengthen Bitcoin's network security. So even if tariffs raise their costs for importing the mining equipment, such as the ASIC miners, firms with access to domestic production or secondary markets often gain an advantage. Another advantage for the increased tariffs are going to be the long-term miners willing to invest in infrastructure that can benefit the less capitalized or inefficient miners, which happen to be forced out. This could give some of these larger Bitcoin miners opportunity, again, to buy up the market share if a lot of these smaller Bitcoin miners get put in a specific situation where they can't handle those tariff increases. So again, this is another way, just like in a bear market where some of these Bitcoin miners who have a rather high cost of energy in order to mine that Bitcoin, they run into the same type of situation. So increased tariffs can also put a hindrance to a smaller growth Bitcoin miner that's rather new to the market. Maybe they're looking to increase their footprint, their market share, and their hash rate. But the problem is now with these increased tariffs, they're pretty much pigeonholed. They don't really have enough revenue getting generated. They haven't overcame some of the G&A expenses, the payroll items that some of these larger Bitcoin miners have already done. Therefore, they have no choice but to close up shop in this type of environment. Also, on top of all of that, leaving these larger Bitcoin miners will also form a more resilient Bitcoin network. So you're going to have a lot more security. You're going to have a lot larger networks, a lot larger companies, a lot larger pools, really ensuring the security of the Bitcoin network is intact. All right, so let's jump into the increased institutional investment in mining. So if tariffs do reduce the number of amateur or small hash type of Bitcoin miners, the large-scale institutional mining firms, the large Bitcoin miners that have very large institutional backing, they're going to be able to consolidate and get more hash power as they're able to pretty much acquire these smaller Bitcoin mining companies, which is going to benefit just from an overall economy of scale. Also, larger mining companies with vertical integration, owning their own energy sources, or maybe they have some really good power contracts with utility companies, they're also going to have a competitive edge in this type of tariff market. So again, it's going to be really critical that the cost of power remains low for these Bitcoin miners, as they have this increased tariff that can potentially slow down their scale up of Bitcoin miners. But again, I already mentioned this does give these larger Bitcoin mining companies a little bit of an advantage, as they're able to squeeze out some of the smaller Bitcoin miners and increase their overall market share. So next is going to be really the potential for policy adaptation. So although there are some high tariffs involved that President Trump has put out, these reciprocal tariffs, he's doing this in order to try to drive more of the homegrown economy, really trying to get jobs back in the US. But on top of all of that, there's opportunity to get Bitcoin mining at an even more elevated level. And that's going to, again, drive more employment, as these Bitcoin mining sites, they do employ their own technicians. Also, if we're trying to compete at a global level, on an economy level even, I think Bitcoin has its fair stake in this game. So jumping down into these bullets a little bit, governments that do impose the tariffs, they may later adjust their stance in order to attract the Bitcoin mining as a strategic industry. I kind of went into detail on that a little bit already. Also, if Bitcoin continues to grow as a global asset, some governments may incentivize mining rather than restrict it. So we have seen some deregulatory activities already going on here in the US. I'll go into a little bit of detail in those on a future slide, but let's continue on. Also, if Bitcoin continues to grow as a global asset, some governments, hopefully the US, will incentivize mining rather than restrict it. That's going to lead to these policy shifts. So we're already seeing some deregulatory opportunities here in the US. There's been some various policies that have been pitched and some that have been adopted. We'll go into detail on a couple of those in a future slide, but just wanted to get your minds thinking on this. So again, the government wants to be strategic. They want to bolster a very mature economy. What better way than to get this decentralized type of currency and really take global dominance of this asset? Also, as a hedge on fiat itself, Bitcoin actually has a stake in this game. So higher Bitcoin price can potentially offset some of the increased costs due to these tariffs. If tariffs lead to broader macroeconomic instability, Bitcoin's value proposition as digital gold may become stronger. Also, a rising Bitcoin price can offset the increased cost of mining equipment and electricity, maintaining profitability for efficiency in miners. So yeah, as Bitcoin price does gain in value, it's going to help keep that healthy ratio between the cost of energy, between the cost of the miners and the depreciation versus that price of Bitcoin. So of course, as we see that value, that price of Bitcoin increasing, it's going to just benefit these Bitcoin miners. And we already talked about how these larger Bitcoin miners potentially can squeeze out or acquire some of these smaller Bitcoin miners. So that global hash, it will get eaten up by these larger Bitcoin miners. So again, as the price of Bitcoin does end up jumping, if the smaller miners have already kind of thrown in the towel, these Bitcoin miners that are of large scale are going to significantly benefit. So let's look at a good example of these larger institutions and their stance on Bitcoin. Use BlackRock as a good example. They are definitely pro Bitcoin. And in fact, you can see that BlackRock's global allocation fund has raised their Bitcoin exposure by more than 1,810% over the last 12 months. And one example that is very, very recent, good case study for the Bitcoin mining community, is BlackRock's exposure to CleanSpark. They actually doubled the overall number of shares that they were holding, significantly increasing their stake in the company. So this shows that these institutional owners are not only going after these ETFs in order to give them a more broad exposure to Bitcoin, but they're also investing in these larger Bitcoin mining companies. And lastly, let's do a deep dive into some of the deregulatory activities that I was talking about, and let's look at the US government's stance on Bitcoin. So on March 6, 2025, President Trump did sign that executive order, created that strategic Bitcoin reserve. We didn't see some crazy price action at the time, but you have to think a lot of these dominoes are starting to stack up. And when that first one falls, I think it's going to actually change Bitcoin pricing and trajectory substantially. But again, that's not financial advice. That's just my personal opinion. Also, this strategic reserve initiative consolidates the Bitcoin assets seized by federal agencies into a national reserve. So again, another great thing that they're doing. In the past, the government sold their Bitcoin. Now, anytime that they seize any illegal activities that involve Bitcoin, they're going to actually put that in the reserve, basically putting it on ice and hodling that in their government treasury for long term. And by doing this, they're actually positioning themselves to use Bitcoin as a strategic asset because they're not looking to liquidate it right after seizing it. The next is going to be this Bitcoin Act. So in support of a lot of these initiatives, Congressman Nick Bejic introduced the Bitcoin Act, proposing a government program to acquire approximately 5% of the overall total Bitcoin supply. That's over 1 million Bitcoins. That is incredible to think about. Look at MicroStrategy, look at what they're doing, stacking their Bitcoin. If the US government was to come over top and purchase this much of the overall Bitcoin in circulation at the time, it could have a significant impact on the price of Bitcoin. This specific type of legislation solidifies Bitcoin's role in the government's national financial strategy. And lastly, let's get into the deregulatory measures. So the Trump administration has already initiated steps towards deregulating digital assets in order to foster innovation and economic growth. This includes halting certain enforcement actions and engaging with industry leaders to balance regulation with technological advancement. We've already seen the Bitcoin summit with Trump, and we've seen Bitcoin being introduced and encouraged by so many state legislations as well. I am very bullish by the activities that I've been seeing. And like I said, it just takes one of these dominoes to fall, and we are going to have an incredible Bitcoin adoption here in the US. All right, and that about wraps it up for me, folks. I hope you enjoyed this quick update on Bitcoin mining strategies and overall Bitcoin adoption, and how I do believe that these increased tariffs actually are bullish for the Bitcoin sector as a whole. So if you like this video, consider giving it a like, subscribe to my channel if you haven't already, drop a comment, let me know your thoughts on the tariffs versus the Bitcoin mining sector and Bitcoin as a whole. Love to hear your thoughts on that. And with all that said, hope you all have a great rest of your day. Keep calm, hash on, and I'll see you on the next one.